Well, greetings to you. Just going to talk a little bit about precious metals today. I haven't been labouring the point much of late because Mark has been doing funny things. And I've been to a conference, I've been to a couple of conferences, one an investment conference and one a gold or precious metals conference, to gauge opinion, to find out what people are thinking, and particularly to get an idea from the retail side as opposed to the strategic side, which of course, as you know, I am in with books and my website and so on and so forth. And rather interesting, nothing very new, or some new, some not so new. First things first, we are, of course, seeing some great volatility, which is being caused by the paper market. And as you know, my subscribers will know, and if you don't know, I'll just explain briefly. A lot of gold and silver is traded on world markets, which doesn't actually exist. It's in paper form. It's a promissory note from a bullion bank or some form of counterparty risk that says, I promise to pay you the equivalent, basically, in cash, the spot value of your gold or silver. And ETFs work on pretty much the same system. So if you've got exchange traded funds in your portfolio, they don't necessarily hold gold, although it looks like they do on paper, but they don't really. It's a promissory note to give you back the value whenever you want your money back in dollars or whatever currency you invested in. So that's how they work. And I said in my book years ago, and things haven't changed, my book, Magic of Banking, there are 500 or so bits of paper, roughly, for every bit of gold or bit of silver. Of course, like fractional reserve banking, if everybody wants their silver at the same time, it's not going to be there. So with precious metals, with gold and silver, you're much better off if you actually hold it in your greasy mitt. You want to be holding it personally. And I've said before, it can't always work because you might have a security issue or whatever it is, as indeed I do myself. And therefore, you actually stash it in a deposit account, a good safe deposit bank. Not a traditional bank, not a retail bank, a lock-up, if you will, as Arthur Daly would call it, a lock-up. So that's what you have to do with it if you really, really want ownership of it. That's how it has to be. Not a promise from a banker. Dear, not a promise from a banker or a politician or any other devious buggers that seem to involve themselves in our lives. But there's something else that's coming. There's something else that's new, which, again, you may be aware of, but you may not. China, which is huge as an economy, and population is absolutely huge, which you all know, but they have been acquiring silver and gold for decades now, with a view to backing their currency with precious metal. I think they will use international trade, their gold reserves for international trade, so they're purchasing oil, for example, from Iran or wheresoever, or Venezuela. They will probably pay in gold. And it looks like they may go to a silver currency. So the currency that these people use in China will be silver, as it was as recently as 1935, when silver was exchanged. And of course, in Africa, the old Austrian Maria Theresa dollars were used up until relatively recently by historical standards, because a nice shiny silver coin means something, not a grubby bit of paper that you give somebody in Africa or the Indian subcontinent, and these people have an idea of the value of precious metals. So they are acquiring these things, and they've even been acquiring doré, silver doré, which they have the refinement systems to actually deal. So they can actually bring in the raw stuff and turn it into silver, and they've got a lot of that too, not just gold. And of course, it makes it all new. This is, my goodness me, what's going on? But of course, this is how it always was. This is how it always was. Gold coins and silver coins and even copper coins. You can remember, my grandma used to call them coppers. I think they were coppers for a while. Anyway, leaving that aside. So real money. And we're going to a stage now where the Chinese and some of the big T-bills, dollar holders, dollar bonds, which are holding massive numbers in Japan, which is still a very significant economy, don't forget, and China, holding because it was a reserve currency, dollars, and T-bills, so on and so forth. Now, I said at the time, when the Americans forced everybody in Europe, decided to confiscate Russian dollar bills, T-bills and investments. I knew this would be a mistake, a terrible mistake, and it seemed to pass by, as so many things do, mainstream legacy media here, including the FT, which seems to get more dire every day. As soon as they did that, as soon as they froze wealth, sovereign wealth, the Russians, and of course various other countries, as soon as they froze that for political reasons, they said, just a minute, we don't like your politics, we don't like you as a nation, so we're freezing your money, which is in a neutral lockup, if you will, in Brussels, in point of fact, in this case, but that's not always the case, or gold in specie, which of course a lot of which is held in America, and the Germans are still wondering whether they're ever going to get all their gold back, and so it goes on. I've done podcasts on that before. So we're living in the time of dying fiat currencies, and if you look at your history, you'll find that all paper money dies eventually. It all goes to zero. Even though it's not withheld, it becomes worthless. And if you look at with dollars, the amount of gold a dollar would have bought in 1971 when they came off the gold standard, and Nixon took United States dollar off the gold standard. It's rather interesting. The purchasing power is now down to about 2 or 3 cents. And of course, the pound is the same. And even the Swiss franc has suffered a hiding as well. So paper money degrades. And you know, when you're going through your old cufflink box or something like that, you might find a few sort of old notes from yesteryear from any nation. And of course, they're meaningless and they're worthless. They won't buy you anything at all. And of course, as I say, the great standard for me is a pint of beer. And if you go to a London pub, and I was in one only just a couple of days ago, you're paying £5 or sometimes even more for a pint of beer, which of course, when I started boozing when I was about 18 years old, perhaps a bit before that, in London, you get a pint for a shilling. You get a pint for a shilling. So that's the degradation of money. And of course, any housewife knows when she's buying groceries, and you all know out there the degradation of money, the standard family car. I think I bought a standard family car in about 1988 or something like that, and it was about 12 grand. It was a Ford Mondeo or whatever it was. And now a 12 grand won't buy anything at all, as you know. So we are seeing the degradation of paper money. And we've seen the new dynamic with the Chinese coming on the block. And how do you get out of it if you're a big holder of paper silver or paper gold? Future, it's a promissory note. So what you do is you get together as a group and you run the price down so you can close your position. And that's what's been going on in the last 4 or 5 weeks. People desperately closing their position, knowing that the piece of paper is worthless and they can only get out, they can cover their position if they can run the price down. You can't do that forever, as I say. You can't do that forever because there are 500 bits of paper and there's a shortage of silver, in particular because it's also an industrial metal, not just a monetary metal, as is gold. So they can't do this forever. So if you've seen a lot of volatility recently, that will eventually settle down, as these things always do. And I'm an old geezer now. I've seen it all before. What you cannot escape, and I'm not putting a number on it because I don't know, and I can't tell you exactly when, but you will find that today, if silver is $80 an ounce, in 2 or 3 or 4 years' time, perhaps when you retire or your children go to university or whatever situation you have personally, that will seem extremely cheap. That will seem extremely cheap. And bear in mind, if you do decide to acquire some, stack it, hide it away, don't go near it. It isn't for trade, don't trade. You can't trade in these markets, it's a waste of time. You put it in a bottom drawer, you hide it somewhere, and you forget about it if you can. You tend to go back and check the price all the time. I know that's human nature. But that's what I'd do if I were you. And that's what I've done since Gordon Brown was selling gold. Silver's a different game. Got to be careful with silver, but gold is a different game. I was buying it when Gordon Brown was selling it. And why did I do that? Is it because I'm very clever and because I analysed everything? I was in the investment world. I was in the city at the time. No, I took one look at Gordon Brown and I thought to myself, there is a real moron. If he's selling, I should be a buying. And I did. And I did. And I did. Thank you, Gordon. As most of you know, my work is very heavily independently research-based. And I get my information from all over the world. It would help if you press the subscribe button and the little bell next to it, because the more subscribers I have, the more likely it is that international independent research institutes will share their material with me. It's most helpful, and then of course I automatically share it with you. So surprise, won't cost you anything. Thank you very much.